What's up, everybody? I hope you're having a great day like we've been having today. Absolutely killing it, name after name with our high five setup. I got another name right here that I'm looking at. That's a high five setup. It's actually a 2-time levered ETF that mirrors Nvda, but is double the move as Nvda. If you don't know what levered ETFs are, the ticker symbol is Nvdl by Granite Shares. It's a 2x long Nvidia daily ETF, like I mentioned. So the high five setup, in case you didn't know, we'll run through it really quick, and then we'll go over line by line. So we have a charting pattern of some sort with a breakout. We have a volume shelf with a volume gap of some sort on the volume profile. MACD uptrending, RSI uptrending, stochastic, which is your trend, also uptrending. That is what we are looking for on our high five setup. It's been very consistent. It's been very profitable. And we are 5 for 5 on earnings right now. Amazon, Tesla, SOFI, HIMS, and MBLY. 5 for 5 using the strategy going into earnings. And have just absolutely demolished it on every single one. So here's another one. Nvidia earnings here in a couple weeks. They're selling at a Blackwell. I think they're just going to crush it on a fundamental standpoint. I don't think they're the top is in, honestly. So I actually have a price target of 190 on Nvidia due to what I'm about to show you, actually. Or sorry, 184.59. So let's get into it. So we have a bull flag here. We can obviously the bull flag, see the bull flag here on the weekly. We had this breakout beginning of October, and we've had a little bit of a pullback and then continue higher. And now this kind of consolidation, this pullback and consolidation, we bounced off this 9 EMA twice now. And we're sitting right here and bounced off this volume shelf as well, with this volume gap upwards to about $91.40. Just tracking that to the top of the bull flag here. When you have a breakout, look left, and that's where you'll most likely go to and hit. So we see the first price target is going to be $91.40. And then we see our second price target is going to be $136.37. And this almost 87% move comes from measuring the bottom of the bull flag to the top of the bull flag and reapplying that from the breakout point. So, or I'm so sorry. Let me move this down here. That was wrong. So $125.11. So 103% move, give or take. So we also measured the move, the time. So every time we have a pattern breakout, we measure we measure the move of it, and we also measure the timeline of it. So the timeline that we're getting on this move is going to be March 24th, 2025, which is relatively soon when you're thinking on a weekly chart, as each of these candles is going to be 1 week. So like I said, we have a bull flag. We did not have a retest on the weekly, daily, or 4 hours. So if you do get into this, I would nibble into it, and then like I have, and it is very possible we could have a pullback back down here to about $56 to $57 range to get this retest off the bull flag. So breakout, get a retest, and then higher, bounce higher. So I wouldn't go full bore on this position. You might miss out on some gains by not going full bore on this position, but in my opinion, you're saving yourself potentially a big little drop here if we do end up pulling back. We're talking about like 21%. So that could be pretty hard to stomach, not gonna lie. So I'd nibble a little bit. And then if we do have a big shoot up, just ride the wave, take some profits at 91.40 and then 125-ish for 33% gain, and then almost 103% gain. Pretty good day if you put a couple K in this. You're gonna make a good little return on it. So bull flag breakout, we have a volume shelf. If we move down here into we'll close out this. into our indicators and how we look at everything, we have our MACD here over our signal line. So MACD is your blue line, your signal line is your orange line. We have MACD over signal line, which is a bullish indicator on this as well. Then for our fourth item, we have our RSI making higher lows, continuing higher. RSI purple line over RSI moving average yellow line. We are only at 57.65. We are not in the overbought area. You see, when we get in the overbought area, it lets us know. And that's whenever we would need to start being cautious about a top out. And, mind you, we are very close to all-time highs, and we are not up here in the overbought area, so that we have a lot of room to run. And what I like to do, you could draw a downtrend line touching the peaks here, and then you can still climb to this. But that's just like a little something you could do. And then if it breaks out of that, it's even more bullish. So fifth thing up, we have our trend. Our trend is moving nicely through the sweet spot. It bottomed out down here and now is moving nicely through the sweet spot. And again, plenty of room to run as it can come up here and kind of move sideways, just like the RSI could come up here and move sideways if it wanted to. So plenty of room to run. We have a high five setup here. This is my personal trading strategy. It's like I said, it's been very consistent and has been very profitable for me. And I'm highly confident in my system, which is why I can stomach big down days and just look at my strategy and say, has anything changed? So if I were to get into this name, say back here, and then we have this pullback here, I'm just gonna look at everything and I'm gonna say, well, we still have a breakout on the bull flag. We're still we still have a volume gap and sitting on a volume shelf. We still have an uptrending MACD, uptrending RSI, and uptrending stochastic. Your trend. So why would I sell it? Why would I exit my position? Because we went down 10% since the peak here. It's people, traders are unsuccessful because they make their decisions off price movement and emotions rather than technicals and strategy. Just a little tidbit. So another thing, like I said, nibble into this position. We move up here, a little bonus for you. We have the Williams R percentage up here. And essentially what you're looking for when you break up above this -20 line here is that just like the stochastic, your trend, it can break up here above 80 and go sideways, but continue higher. Same thing with your Williams R. And what I found to really work is when you get up here with your Williams R and you break this, look for the pullback. When you get that first pullback, as we see right here, I'll draw it for you. When we get this first pullback, you need to create your box from your peak down to your pullback area. I like to call this your support. You are creating support on your Williams R, and you'll continue up here and go sideways. And what you are looking for and want to make sure you'll know when to sell out of the position when you have a breakdown below that support that was made. That is a bearish signal. Furthermore, if you have a rollover and a cross MACD blue line over your signal line downward, along with the break of this bottom line here on your Williams R, you have what I call 2 of the 5 going against you. When you get into the high 5 setup and then you are riding it and you get 2 of the 5 indicators going against you, it is time to exit the position. So you could get that, or you could get the stochastic the trend, which moves ahead. The trend moves faster than the MACD. So you could also have the trend here move down red through yellow, and that would also be a bearish indicator going along with your Williams R. If I'm going to rank them and let you know the ranking scale of most important to least important on the top calling and getting a pullback, or needing to exit your position because things are going to go against you, it goes Williams R. Williams R is number 1. And then I would say your stochastics number 2, and then your MACD and RSI are together. Because essentially the RSI is a little tougher, and the MACD is a little tough because it moves slower than your stochastic. And furthermore, the RSI is more difficult because you make these higher lows, and it might take a little longer for you to break down, and then also break down from this higher low down here at 50. So that's why your Williams R is much more important. Now, the only caveat is that you have to understand is that we are on a weekly chart, and being on the weekly chart, you have to understand that it's crazy, but you can have this Williams R. Maybe tomorrow they get another pullback, but they're still holding above the breakout area, and maybe they're just going for a retest. This could come like down here, but it could snap back before the week is over, and it doesn't even show that. So it comes down here, but at the end of the week, it's actually still up here, if that makes sense. Because it's a weekly chart, and because it's a weekly chart means that just because it's coming down here doesn't mean that if the stock price doesn't keep going higher for the rest of the week, say Wednesday, Thursday, Friday, it's just going to come back up here and be fine for the week, because it's not a daily, it's a weekly. So I always say with your Williams R percentage, you need to take it highly into consideration for being your top caller and your bottom caller. But at the same time, you need to understand that on a Monday, when your candle is exactly the same candle as a daily, your Williams R is to be less trusted. As you move throughout the week and get closer to Friday, at that point, your Williams R is like no lie. Like, it's just 100% accurate pretty much. Because on Thursday and Friday, you're pretty much not going to get a big enough swing usually to make that move. But it's also just, understanding what's going on, and just it's a lot more than just what I'm saying it is. But it just takes experience working with it a lot and understanding how it moves and how it moves with certain stocks. But as we can see over here on Nvda, if you don't want to play the 2-time levered ETF because it's too much to stomach, and you just wanted to play the Nvda stock, is the exact same thing. Williams R and everything's still uptrending. It's still a high 5 setup. So, like I said, if you wanted to get in now on Nvda or its 2-time levered ETF, I would nibble in, just because we could get a pullback. But I do think this is going to just continue higher. And I think it might be one of the ones that doesn't get a big pullback back down here to retest. Because at this point, it is a bigger pullback to get all the way down there. We're talking about a 10% move to get back down there. So on Nvda. So I just can't. I don't know. I don't see that happening in the market. I see us continuing higher and being in a bull market for other reasons, other videos I've showed with my QQQ analysis here, and us going sideways and continuing higher here. So awesome. Well, I really appreciate all the support that you are giving me. We're closing in on 1,000 followers, which is absolutely insane, over on X, and even on TradingView here. We are literally just demolishing it as well. We have over 500 followers. I'm really, really, really humbled, and just feel, on cloud 9 for people, being interested in my strategy, and being interested in my content, and really enjoying it. I've gotten so many DMs and great comments from everybody, and it's really awesome. I really love this game. I really love being a full-time trader and a profitable trader, and being able to give back and help people at the same time. It just means so much to me, and um, yeah, it's just really great. So I really appreciate all the love and support, everybody, and hope you have a great rest of your week. And I only wish you the best with all your trades. Until the next one, have a great day.